Welcome back to the channel, or welcome to the channel if it happens to be your very first time here. My name is Troy, and today what you're going to see is all of the juicy details from all of the wife and I's investing accounts for the month of January. From the ups and downs of the Roth IRAs and 401ks to the account we're eventually going to use to retire early, it's all going to be detailed in today's video, so let's go ahead and see what's coming up with this right here. In today's episode, we're going to be going over the total portfolio value across all of the accounts, and that includes the breakdowns on the 401ks, the Roth IRAs, the HSA, and the taxable accounts. Then we're going to jump right into all the buys completed for January across all of the accounts. After that, we're going to jump right into the projected annual dividend income for all accounts to conclude January. And again, this is going to include breakdowns on the 401ks, Roths, HSA, and taxable accounts, so you can see exactly where the money is coming from. Then we're going to go ahead and get a first-time look at the full portfolio diversification amongst all of these accounts. Then we're going to go account by account to review the short and long-term performance of these portfolios versus the markets. And then I'm going to show you guys this brand new tracker that I made called the Cash Deployed Tracker that I'm excited to debut right here on the channel. Now, I do want you guys to remember that this style and layout of video is completely new to me. So as you guys watch today's video, if you guys see stuff that you guys would want me to remove from these videos going forward, you don't think it's needed, or if you guys think that there's other stuff that you'd like to know about the portfolio that I did not include, let me know down in the comments. But as you saw, we have a lot to get to in today's video, so let's get to it. So in 2025, more than anything else, our goal is to grow the account balances as much as possible. On the screen right now, you can see all 7 of our accounts and their combined balances and how it's grown since last year at this time and over the past month. Now, I also have this same exact graphic for each of the individual accounts, but in an effort to avoid diving all the way into the weeds and making this video take the rest of both of our lives, I'll just throw this little graphic up on the screen so you can see the breakdown. If you guys really want more detailed breakdowns on these portfolios in next month's recap, let me know down in the comments and we can nerd out together. While compiling all of this data for today's video, I was trying to figure out the best and easiest way to present it to you all. I'm not sure this is it, but it's what I settled on for the time being. Feel free to pause the video here if you want to dive into all the details a little further, but here are the high notes and my takeaways. The most money spent over the past month was on the S&P 500 between VOO and the wife's S&P 500 option in her 401k at $1,621.89, which is then followed by the wife's mid-cap option at $368.10, SCHD at $350.23, Costco at $213.19, and Visa at $212.77, rounding out the top 5. In total, 26.7577 shares were added in January, $3,757.46 was spent, and we added another $52.45 in projected annual dividend income just this month. Speaking of the projected annual dividend income, better known as PADI, I figured I'd share the updated numbers for the full portfolio with you right here. Once again, I have the individual numbers for all of these accounts, but to save some time, I'll just throw those numbers on the screen so you can see the breakdown. As I said earlier, if this is something you want to see on a more granular level in the next video, let me know down in the comments. And just in case you were wondering, let me quickly explain the drop from January 2024 to January 2025. This is because of the very large portfolio changes made to our retire early taxable account that was detailed in last month's recap that I may or may not link on the screen somewhere, but that change alone took me from about $1,200 a year in PADI just for that account down to the $433.41 per year you saw here. So in addition to this being the first time I'm ever splitting up my dividend and portfolio recaps, as well as the first time I'm sharing all 7 of our portfolios, it's also the very first time you're going to get to see the full diversification of all the portfolios as well. Again, I'm not going to go over each of these, but as I compiled this data, I can say that I'm really happy with the balance we struck kind of on accident. Looking at the trends overall, we have 35% in the S&P 500 or something that tracks it, 15% in mid-cap companies via the wife's 401k, another 15% split between SCHD and my triple leverage positions, and then we get into the 5% that is held in my 4 favorite individual companies, followed by 4% or fewer in the rest of the positions. If you only look at our top 3 positions, the S&P 500, midcap, and SCHD, that makes up a pretty solid 58% of the portfolio, with the goal that that other 42% can help us outperform the market, as that's our goal over the long term. This screenshot is going to show you the exact numbers behind each holding all the way down to the smallest holding, which is just over $100 into cryptocurrency. One thing I did want to make sure is clear is that I personally do not see value in doing portfolio diversification based on market value like almost everyone else does, because that's always going to be a moving target. So if you notice at the bottom of this detailed chart that the total amount is only $248,834.96, and remember the portfolio value from the beginning of the video being that $341,885.84, that would be the difference in gains. It's $93,050.88 for anybody that was going to do the math. All right, as I've said at least a few times at this point, our goal moving forward is going to be to have our money make us the most money possible this year and for the foreseeable future. With that being said, the way we track that is going to be comparing our returns to that of the major indexes, which are the S&P 500, Dow Jones, and the NASDAQ. Unlike some of the previous things we've gone over today, sadly, there's no way that I know of to provide this information in a cumulative way. If you guys do happen to know a formula or something, please let me know that down in the comments. So longer term, I'm going to try to work some editing magic here to show you this information in the best way possible. A few things of note while you guys are looking at the information on the screen: because my workplace retirement brokerage sucks, shout out Merrill Lynch, I was not able to find this information on their website for my 401k, so you're not going to see those numbers on here, but it's all invested in QQQM, VOO, and DGRO, and that's one of the smaller accounts out of all these portfolios, so it's not a terribly huge deal. Now again, it is our primary goal moving forward to outperform the overall markets. However, I do not think it's a healthy expectation that we will do so on a monthly basis. So while I'll still share the very short-term results on these portfolios going forward, the goal is that the longer-term columns are the ones with the higher numbers than those of the indexes. Every so often, I think of an idea that not only do I think is a good one, but it also comes out of my head and into something like Excel and doesn't suck or overcomplicate things, and I believe this is one of those times. What you all see on the screen right now is going to be called the cash deployed tracker, and it shows just how much money was invested across all accounts each day the market was open. Now, to some people, this style of investing might seem like too much work or a waste of time, but it actually provides me a sense of peace. Allow me to explain. When I first started investing, I would pull up my brokerage and not only pay attention to the stock price, but how that stock was doing at that particular moment, which caused my brain to do all kinds of mental gymnastics that basically equated to little old me trying to time the market. What would happen as time passed is I would see that a stock I wanted to buy was up and wait to see if it would drop tomorrow so I could get a better deal, or on the flip side, I would see that a stock I owned was down and pile in some cash to quote unquote buy the dip, only to see it kept on dipping for the next week or two. As many of you know, and some of you will find out, timing the market is a losing battle, so I was trying to figure out the best way to combat this. Insert dollar cost averaging to the highest degree. Even as I learned about dollar cost averaging, my complicated self tried to pick a single day of the week to do those investments, and it always seemed like the worst day. Right before earnings, right before the Fed speaks, you name it. So I said screw it and started doing it daily to take all of the pressure off of myself. Hopefully, while I was talking, both charts were on the screen at the same time, but what you're going to see here is a completed January, all of the days that the market was open, and exactly how much was invested on each of those days. The higher days are going to be paychecks going into 401ks, investments into the wife's Roth as I do them as soon as I can in the month, and the bi-weekly investments into the anyone can invest account. This bottom screenshot is the one I think will be really fun to keep up with throughout the year and keep you guys entertained. You'll be able to see the total and average monthly cash deployed, and thanks to simple math, that also gives us a 2025 cash deployed projection. I personally have no clue if we'll be able to keep that projection that high all year, but I will say that we didn't do anything special for January, so I'm hopeful to say the least. Also on this chart, over here on the far right, you're going to see the total number of investable days, how many of those days I actually invested, and the invest percentage. Again, I'm not sure if I'm going to be able to keep up that 100% for the whole year, but we're going to give it our best college try. Again, I hope you guys find these simple charts as cool as I do and want to keep coming back month over month to see these numbers progress, so make sure you're subscribed with the bell rung so you don't miss it. Even though the behind the scenes on these kinds of videos is uber time consuming, I hope you guys see it as worth it and appreciate me sharing all this information with you guys. Again, if you guys have any suggestions on things that you want to see in this series going forward, or things that I can remove from this series as you guys saw as unnecessary, let me know in the comments down below. And if you guys are only seeing this video and you're wondering where's all the information about the dividends, well, that can be conveniently found on this video right here. But until next time, see you.